Assalamu alaikum viewers. Today I am here to solve your problem of journal entries. We will start step by step guidance to journal entries. Before starting, don't forget to subscribe, like, and share my channel and turn on the bell icon for notification. So let's start the journal entries. First of all, we must know what is actually the journal entry. So, have you ever wondered how businesses track their money? It all starts with journal entry. To track the money, where it is going, and from where it is coming in the business. The businessman has to focus on the journal entry. So, what is journal entry? Journal entries help businesses record every transaction in an organized way, whatever is happening in the business for each and every step. Either it is purchase, it is sale, it is loan, it is expense, it is income, revenue, capital, drawing, whatever. For each and every activity, there is a transaction that is actually posted to journal entry. That's why journal entries are very important. But to know about a journal entry, to post the journal entry, first we must understand the source documents, why they are important. So, what are source documents actually? Source documents are the proof of business transactions. For example, these are invoices, receipts, bank statements. They show us what the business is purchasing, what it is selling, where it is spending, from where it is getting money. So these are the documents, means these are the proofs of the business, right? So they are very important. They contain the details like the date, at which date that activity actually happened, what was the amount, and what was the name of the people those were involved, means who bought it or who sold it, or where the expenses has gone, where the rents have paid. So here the complete details we will get. From those details we will move to the next step. So why the source documents are important? Why these documents are important? They help keep accurate financial records. With the help of these, we can keep in the business the record accurate with the given date, with the amount, and with the details of the people. They are needed for the taxes, audits, and tracking income expenses. When there is business audit or when the taxes are uh, estimating, these documents are important to track, to check. Okay, they help businesses see where their money goes. These are the only proofs that can show that at that date the amount has gone to that person, or the amount has been coming to the business, or the income has been coming to the business from that activity at that date from those people. So such details we can only get in the source documents. How? For example, the source documents: invoices, receipts, bank statements. Here, invoices, they are telling us about the bills of the purchases or sales. From these bills, we can understand at what date, what kind of the products were purchased or sold, and to whom, right? From the receipt are actually the proof of payment received. So which payments were received, those documents, these documents can give the proof of such payments. And the bank statements, these are the records of money going in and out. So these can be the best to track what we are getting in the business and what is going out of the business in the certain period, right? So next, now we will see the journey from source documents towards journal entries. Now we will see how these source documents are connected to the journal entries. Sorry, actually, due to Ramadan, I have sore throat. That's why there is little problem. So just ignore it, okay? So, next, how to use source documents for journal entries. We have to connect the source documents and the journal entries. We can get the important details to post in the journal entry from the source documents. Otherwise, we cannot remind each and everything. What was the date of that sale? What was the date of that purchase? When did we pay the rent? So we must have proof for all these transactions, for all these activities. So we will get these proof from the source documents and we will post them in the journal entry to pass the transactions. Okay. What type of account was that? It was sales account, it was purchase account, it was expense account, or what it was. So these details source document will provide us. Next, for example, there is a business that buys office supplies. So we remember that we have bought office supplies or office equipments, you can say, in this month, but we must not remember what was the date, what was the amount. Okay, so these details from where we will get that from the receipts, and receipt is a source document. Receipt will provide us the date, the amount, and the name of the place and everything, name of the actually the office supplies, what kind of supplies were those. So receipt will give us the detail and that we will pass to the journal entry, and that can be checked later on. So understanding for posting journal entry, we must understand the debits and credits, because to post any transaction in the journal entry, there it must be affected in two ways, debit and credit. So every transaction has two parts, a debit and a credit. So what question is that what will be debited and what will be credited in the journal entry? Debits increase assets and expenses but decrease liabilities and income. On the other hand, when in the business, the liabilities and income means the revenue, when liabilities and income they are increasing, they will be credited, and when the assets and expenses they are decreasing, they will be credited. So this is the detail of debit and credit. If you remember these points of debit and credit, you can easily post the journal entries. That will be very simple for you. When we post the journal entries, we have to remember that we have to maintain the accounting equation. So what is accounting equation? That is actually the total asset of the business must be equal to the liabilities plus equity. Whatever asset in the business we have, that can be the cash, that can be the inventories, that can be the supplies, that can be the equipments, the land, whatever, that all asset involved in the business, that must be equal to the liabilities plus equity. Liability, what the business has to pay to others, that can be the credit purchases like that, or the loans that the business has taken. So such liabilities plus equity is the capital that the owner has invested in the business. It can be in the form of cash, it can be in the form of land, it can be in another form of asset. So this equation must be maintained for the business, that asset is equals to liabilities plus equity. That must be balanced in the scale of accountancy, right? That must be balanced. So these were the details to understand the connection of journal entry and source document. Here we have some examples of common journal entry to understand how the journal entry is actually working, how we are posting them. Here we have an example of sales and revenue journal entry. Here is the account of sales and revenue. We will see how we can post the journal entry in sales and revenue account. For example, a customer buys a product for $500 on credit. Here we have a transaction of buying, of purchasing something that we have bought. The customer the, not the customer has bought from us the product that is for $500, but that is actually our sale because customer is buying from us, so it is our sale. So we will post it in the account of sales and revenue account. But we have to see that here the sales is on credit. On credit means the customer didn't pay it on cash. It is on credit means the customer will pay it later. So what will be the transaction? First, for the journal entry, we must know the date. That date, the detail of date we will get from the source document, right? We have receipts and bills from there. We will get the date. We will check the account title. Account title here it is sales and revenue, and another account. We must have two accounts to post the journal entry as it is always dual entry. So from the transaction we can understand that one thing is we are selling, so it is sales. We are getting the sales. So here as the sales are increasing, sales means the revenue, the income from the sales, we are getting the income. So as the revenue is increasing, so we learned it that when the revenue is increasing, it is always credited. So we will credit in the account of sales revenue the amount of $500. 500 sales revenue will be credited. What will be the second account in to complete this transaction? As the second account is we have sold it and we got the money. But the thing is that here it is not cash sales, it is credit sales. So for credit sales, we always use the term accounts receivable, means this amount we will receive in the future. So that amount is increasing our asset, that is increasing our cash. So account receivable will be debited as it is increasing our asset. When the asset increase, that is always debited. So here are the two accounts that will be affected with the entry of sales and revenue journal entry. Here we have the second example of purchase. Purchase and expense journal entry. So, for example, buying office supplies for $200 cash. Here, the business had bought the office supplies and they have paid cash, not credit. Business has paid cash $200 for the cash. Now we have for the office equipments. Now we have to check to pass this transaction which two accounts can be affected. As we can see, the business has paid the cash. It means the cash account will be affected, and second account as the business supplies, we got the business supplies. So second account will be of the business supplies. So let's see. We will get the date details from the source documents, right? And the account title, the first account title, which account will be affected first? That is office supplies. So office supplies and the expense journal account. Here as the office supplies are increasing, office supplies we are getting in the business, it means it has increased the asset of the business. So when the asset is increasing, it will be debited. So 200 of office supplies will be debited. What is the other account? Other account is the cash. As we have paid the cash, means the cash has gone from the business, going out. Cash is going out of the business. So when the cash is also asset. So when the asset is decreasing, here the cash is decreasing, it will be credited. So this will be the complete post complete entry of the transaction of buying office supplies, right? Next example. Now we have third example, cash receipts and payment. Like, for example, receiving $1,000 cash payment from a customer. Okay, here is a customer that has bought something from us, okay, but he didn't pay at that time. That was credit sales. Now the customer has paid us $1,000, means we have got the payment. First, when the sale was made, that was actually account receivable because that was credit sales. Now, in the future, we have received that payment. So, what will happen? Which account will be affected? Let's see. Now, first, we will get the detail of date from the receipt from the source document, and which two accounts will be affected. Here, the cash coming into the business. Cash, we have increased the cash, means the asset increased. So when the asset increase, it will be debited. So $1,000 will be debited in the cash account. Second account, that was account receivable. As this entry was before the entry of account receivable, it was actually the entry, the transaction of credit sales. Now we have got this amount, so that account receivable will be credited, that was first debited. So this is the method of passing the entry for receiving the cash from any credit sales. Okay, so these examples must be clear to you. Listen it again. When it will be clear, the journal entries will be very easy for you. After that, now we put all these examples together to just make a simple example. Now, the scenario is that the business buys equipment, okay? A company buys equipment for $5,000. Equipment are the tools that are required for the business. It can be machinery. So, business has bought machinery or equipment of $5,000. For that, they have paying $2,000 in cash and the rest on credit. Now, here we have two things, that sum of the amount, that is $2,000, has been paid in cash and rest of the amount is credit. Here we will have two types of entries. One entry will show the cash that we have paid, and another entry will show the amount that is left on credit. Okay, and the third entry will be for the equipment that we have got. So let's see how we will post this entry. Before that, we must remember that there are always two parts of transaction, that is debit and credit. And for debits, we remember the rule that when the asset and expense increase, they will be debited, and when the liabilities and income decrease, they will be debited. On the other hand, when the liabilities and income increase, they will be credited, and when the assets and expenses decrease, they will be credited. With following these rules, we will see how to create the journal entry of the given example of equipment. Let's see. So, as I told you, here we have three accounts involved. The first account, as the business has got the equipment or machinery, the first account will be of equipment. As the equipment has increased in the business, the machinery is getting in the business, means the asset is increasing. So it will be debited 5,000. The total amount of the equipment will be debited. Second, as we have paid the cash paid means the money has gone from the business. So when the cash gone means the asset decreasing. When the asset decrease, that amount will be credited. So $2,000 will be credited. Third account. Here we have some amount that we have to pay in the future, that is credit amount. That is actually when we subtract 5,000 minus 2,000, we will get 3,000. So amount of 3,000 we have to pay in the future. That is our credit. So when the business has to pay something in the future, that is actually the liability of the business. Liability means to pay in the future. So liability when increase, it always credited. So here the liability is increasing. It means the 3,000 amount, the $3,000 amount will be credited. From this example, it is very clear which account and when it will be debited or credited. So after getting all these examples, journal entry will be very easy for you if you just focus on the rules. To practice, here are some tips that you can keep in your mind to practice, okay, for the beginners especially. So, first, how to stay organized. Keep all the invoices, receipts, and bank statements in one place. If you will keep them in another places, you will forget where it was and maybe you will miss something. Okay, second, record all the transactions daily or weekly to avoid mistakes. Don't keep it for the future. I will post it tomorrow or after 1 week. No, just keep it on daily basis, on the spot, so you can remember the proper figure, you can remember the proper transaction, so there will be no mistake in posting the transaction in the journal entry. Third, check your bank statements to make sure everything is correct. Keep on checking the bank statement, that is showing what is going out of the business and what is coming in the business, so that is easy to track your business. Using accounting software to save time, instead of using manually, you can, instead of using the registers, I mean, you can use the softwares. That will make very easy, and over there the transactions are actually working automatically. So you can try the tools like QuickBooks or Wave. These are the very easy and best tools for the beginners to record the transactions automatically. Use online softwares, for example, for the easy access and backup. You can also use them, and you can use there, you can create the template over there for your daily transactions to save your time, and that is easy to keep track, and that is easy to keep the backup for the business. Now, from where we can learn to use these tools? We can use the online, we can get the classes from online courses of Coursera, or from YouTube you can get the different lessons free of cost. You can read accounting books either to increase your knowledge. You can follow the business blogs to get updates. You can join different Facebook groups or forums for your accounting help. If you will follow these tips and keep on practicing, you will be the best in the accounting, and it will be very easy for you. Even the experts, they keep on reading, they keep on searching, they keep on updating themselves with the latest and easy softwares and the books to update their knowledge. So always keep on learning. Learning never ends. Okay. With this, I'm going to close this topic. I hope it will be clear what is the connection between the source document and journal entry, how the source documents are helpful for the journal entries, and what is the step to step guidance towards the journal entry. Hope this lesson will be very beneficial for you. Just keep on sharing and liking. And next time I will be here with the next important lesson. Take care.